Good morning. Welcome to London session. I hope you're doing well and I hope you can hear me. We are looking at the dollar index, right? And if you did watch my weekly review for the Sunday, I talked about what I was kind of looking for on the dollar index, right? And I mentioned to look out for either we take out Friday's high and then we break down and then we look for price to show us willingness to retrace, or you look at Monday's high. So yesterday we saw price take out Monday's high here and then took out this low. We were watching it actually live in the Discord when this happened, and we talked about price potentially also rejecting below this low as well. So we've had both Monday's high and low being taken, and price has come back into the range. Now, in my opinion, since we did not attack the Tuesday's low, and if you look on the daily, this is kind of you call it the engulfing, but this is not engulfing to me. It needed to close below this low for it to be engulfing, but the fact that they took out this high first, right, and then came down, I'm looking for price to go up and then come back down again. Okay, for me to look for higher prices on the dollar index as it is now, they will have to go and close above this high. Okay, so price will have to go and close above that high for me to consider bullishness, or for me to consider price going up again on the dollar index. For now, I'm looking for price to drop. Okay, so on the H4, you will see that we do have a high, we made a low, we made a high, and then we broke down aggressively, right? So this becomes an important candle, the change of direction. Now, inside this, bear with me. I want to see price drop from here. All right. So going forward, I'm looking for price to drop. Okay. And I think for those of you in Discord, if you are not in the Discord, I'm gonna drop the link for the last time, because this weekend I'm gonna get rid of everyone. So if you've not been in there, too late. If you've not been in there, too late. So here is it again. I'll get rid of everyone this weekend as I prepare for the month of September. Alright, so you have till Friday anyway. You can still benefit from it because we have live sessions till end of the week in the Discord. However, I did drop this setup in there because I did see that price wanted to trade into the imbalance on the daily, right? So if you look here, I'm looking for them to trade into this imbalance. Okay, so that's what I'm looking for with the weakness, anticipated weakness in the dollar index. Okay, so I'm not interested in euro. I don't like what euro has done. Even though it can go up, I don't like it. Based on the H4, it can. Hey, there's nothing wrong. I just like the Aussie. I see some strength in the Aussie, so I like the Aussie. New Zealand is not bad either. It traded to this last down candle, so that can also go up as well. And British pound is also not bad. I just didn't trade lower enough for me, right? It didn't trade lower enough for me, so that's why I did not use the British pound. Again, that can also go up, right? But this is the one that gave a deeper retracement, so that's the one I elected to go with. Okay, so I'm looking for price to trade up into this imbalance right here, right there. Okay, so that's, you know, the trade idea that can be taken for today. And if you don't get there today, I'll look for a continuation to the down to the upside tomorrow. And then I don't know, maybe where we'll be on tomorrow by New York session, wherever we'll be by New York session, that's where we will look for price to either pause and then maybe Friday reverse and back down again. Europe held. We've been looking for sales since Monday. Again, if you did watch the forecast for this week, I mentioned that I wanted to see this imbalance break, and then if that imbalance gives up, we'll be looking for price to attack this equal low here. And based on the higher time frame, I think we're gonna go lower. I think we might come down for this. Okay, last week we did talk about why I was expecting price to come down here, so I want to see them run down aggressively below this low today, if not today, tomorrow. All right, in terms of trade ideas, yesterday they left the fair value gap on the H4 here. So if you see price, you know, all of a sudden out of nowhere rally, that's a good area to fade the rally. Okay, so out of nowhere, if you see, you know, some news event comes in and then you see this thing go up aggressively, that's where you can fade it to come back down, right? If it's not an aggressive news event and then it just goes up gradually, then you look here. So in here there's a small imbalance, plus we have the Asian range high there as well. So if, let's say, price that's coming up, right, then that would be a good level to sell to continue going down. But if there is any news event and it jumps up quickly, then that would be a good area to anticipate a fade. Okay, gold. So gold, yesterday we identified a few of us, I think two of my former students and myself, we identified this level being an important level for price to give us a scalp. And yesterday we saw that play out to go up in here. Okay, now I personally didn't take the trade because of how price dropped down. I should have just take it and just see what price is going to do, but the 1 hour time frame here, as it was dropping into it, before this candle close, I was seeing this, right? And that to me is a breaking structure for price to do what? To come and attack this low. So I didn't participate in that. But on the 15 minutes time frame, as soon as we went above that high, okay, we were having a live session. I mentioned if you take out that high, then I'll be interested to trade up there. But as soon as we did, some news event came in and then shot it up into that level. So today what I'm looking for is a continuation. Let's remove that. I'm looking for continuation to the upside, right? How far? For now, I'm looking for this. Alright, for now I'm looking for that as the draw. Okay, now what would change that in terms of direction if we trade back below this low? If we trade back below this up candle here, then that's it. I'll look for price to continue going down, to come down here. But as long as we're above that and this down candle, I'm looking for price to go up here. So if it retraces to OTE, it's an opportunity to buy to go up there. Okay, so if you see it retracing, that's a buy to go up in here. And once you get there, just be satisfied with that, because it's a counter trend. It's not the pro trend. This is the trend. Okay, so you take most of your profit here and then put your stop loss to break even, and then leave it and see how far or where they're gonna take it. All right. Crude oil, that was also given last night to look for price to attack this high today, and I've actually got a trade on this morning using time of the day. So I entered at 7 here, attacking this equal high. So on oil, we are looking for price to go up here and probably trade to this order block there on the 1 hour time frame. On the H4 is just a wick. Okay, on the H4 is just a wick, but on the 1 hour there's more than a wick. So since the wick is still trading, right? The wick is still trading. I'm not convinced that we are going up yet. Yes, in the Discord, I'm getting rid of everyone, and if you are in there, you understand why I'm getting rid of everyone. Or maybe if it's not if the announcement that I gave on, let me check. The announcement that I gave on I can't remember now. When did I give the announcement? On the 18th. So on the 18th, I gave an announcement, right? If you check the 18th, I posted two videos, right? One in the Discord and one in the Telegram. right? I've done it on purpose so you don't miss it. So if you are in the Discord, you will see on the 18th I posted a link on in the Discord and in the video server, right, where I post the forecast and any video that I want you to be aware of, right? If you watch the second one that was posted on the 18th, you understand why I'm getting rid of everyone, right? Okay, so here you're looking for price to go up, but like I said, I'm not convinced yet that price is gonna continue going up because the week is still trading. Now this is a weekly high, so I will see how price is gonna react above that high. Okay, how we react above this high is going to give me a clue whether we are going to continue going up or we are going to reverse. Okay, so I have to wait for more information once we go above this equal high. Okay, so we're gonna wait, maybe New York session today or tomorrow, I don't know. We're just enjoying the buy to attack those highs, maybe to trade up into this last up candle as well, and then we will see what price is going to do. There's two levels that I like, this one here and that one there. Okay, so if we go above this and the price action that I see in here causes for a reversal, I'm gonna trade that. If we don't reverse, or if I don't see the price action that I like to cause for reversal, then I'll keep watching for the next one. Okay, but in terms of the buys, those of you in the Discord that bought this, make sure that you take most of your, if your position allows you, okay, if your position allows you, make sure you take most of it off here, or even take 50% off, close half of it there, and then if it continues going up into that level, I'll close everything. Okay, if it does hit this level, I'll close everything and then wait, because it's either we will get some form of a reaction or rejection here, or we will get it up there. Now if you look at the weekly, the reason why I'm calling for that is the last impulse leg, right, was to the downside, this candle here, right? So anything coming down, anything coming back up is considered retracement until we trade above this down candle on the weekly. So if we don't go above this, then anything coming back up will be retracement, right? So if it's a retracement, then we don't want to be carrying trades past weekly highs, especially this one. All right, so that's where I'm looking to see what we will get above that. Okay, so enjoy the ride and you see what we're gonna get when we get there. Alright, let's go to over here and let's answer that question first. Should liquidity be the first thing we look to, then structure? Let me think. Should liquidity, it depends. It depends on you. I look at liquidity first all the time, where I look at where liquidity has been grabbed first. That's where I start my analysis from. Okay. So where liquidity has been grabbed, then I start looking at price action on that pair. If we've not grabbed liquidity, I'll have to wait, because for price to move, there needs to be a grab of liquidity. So you need to define how you want to look at it. Maybe you are interested in market structure, so you're not really bothered with liquidity. But anyone trading smart money should be bothered with liquidity, because if you're trading smart money and you just consider price market structure, you'll be missing the bigger picture where liquidity plays an important role, right? Everything is about liquidity grab. Price action after liquidity grab is what you're interested in. But today I will talk about market structure because I know some of the people in the Discord are a little bit new, so I will use today's as an opportunity to talk a little bit about market structure. All right. Okay, Euro Yen. Yesterday we did talk about this one, and it did exactly what we were expected. We had price run above this high. It broke down, and if you are not in the Discord, you will not understand. But we talked about this, right? That we might get price retraced into it and then drop down again, because the higher time frame is dropping, right? We are dropping, hence this is just a run on liquidity, breakdown, pull back. We expect price to continue. With what I'm seeing now, I think we will attack this low. Okay, so we are looking for continuation to the downside. However, there's a small little gap here. There's a small little gap here that price might pause. So be aware. And if you see it pausing, I like they've left another small one up there. If you pause and it gives you an aggressive retracement, that can be a good level to sell. Or you can use this high and wherever the low will form, right, and then sell the retracement to OTE. Okay, so that might be, maybe it might go above the gap and probably trade up here. You want to sell, okay, and that would be inducement or engineered liquidity, right? And then you sell this up candle. That's if it retraces from here. All right, so depending on where it will retrace, that's where you're gonna pull the fib. Right, if you want to have clues of where it might retrace, you can use this range here. Okay, and then highlight this level. You can also use this range because that was a retracement, and then highlight that level. So these two levels will be where retracement can form. So you can formulate a trade before it actually does it here. Now if we retrace from here, you'll be selling up there. If you retrace from here, again you'll be selling here. It makes no difference, but you decide. Okay. All right, CAD yen. This one is playing the range, so leave this one alone for now, even though I'm expecting them to drop. We are in premium. Over the weekend, and the forecast that I didn't go through this. I only did it in the Discord for those in the Discord, because we did a live session, 2 hours live session yesterday. So we talked about what I was looking for. That shaded area is where I'm looking for a swing high on the daily to form, right? But price is just taking its time in here. All I want to see is one candle close below. On Monday I wanted to see them close below that didn't happen. Tuesday took out Monday's high. I'm sorry, Monday took out Friday's high, and I wanted to see them close down here. They didn't. And then Tuesday went up. I wanted to see that close. Initially it felt like they were going to do it, and again they didn't. So today I'm looking for that. Once we close below this, then my draw on liquidity is going to be here. Okay, so once we close below there, once we close below this up candle, I'm looking for price to trade down here. Alright, so keep an eye on this, or you can set an alert down here like this. Crossing down like that and drop it there. So if price takes out that low, you will get an alert to prompt you that we've gone below we've gone below that low, and you can obviously look for price to continue coming down here. GJ, same thing. Let's go to the H1. We had price take out this high with the news event. We broke down and we talked about price coming back here to continue going down. Again, from the daily perspective, right, we closed bearish here, so we're looking for continuation to the downside. We also closed bullish here, so it's kind of, that's why it's doing what it's doing. Okay, but based on the higher time frame, if you zoom out, you will see that which is what I'm going to talk about, we are making lows. Okay, it's not making highs. Every high is being cut, and then we keep making lows. So based on the higher time frame, I think we're gonna go down. I like that high being rated there, and there's this coming back. So I would expect them to continue going down. Now, what would change this bias? What would change that is, since we have both sides of the market giving an order block, this one and then that one, price came to this and then dropped. So as we are inside that one, it can also reject. So if it does, right, then it will give you a break in market structure on the H4, like it did here, right? So if we come down into discount, maybe here we actually have, so now we'll be here, or even as it is now. Okay, if you see it give you an aggressive type of run above high, then you're gonna switch and attack these highs. Okay, I'm not saying you should switch now, but be dynamic and look at what price is doing. Always look at price action, not what you think should happen. Okay, so the fact that we do have a range here and a range there, any sides can give you a move. If they're going to go up, aggressive run above this high, you're gonna go up. But we do have aggressive run to the downside, so we are sticking with the downside. Okay, it's just a pain to trade it, right? So the easiest way, as I teach them yesterday is frame your trade off from swing highs on the H4. That's the easiest way. The swing highs on the H4, it's the closest to the daily time frame. Okay, the swing highs on the H4 is the closest to the daily time frame. So anytime you form a swing high on the H4 and then we pull back, that's when you engage to sell. Okay, that's when you engage to sell. So anytime it forms a swing high on the H4, that's when you want to participate in the sell, not in the lower time frame. Don't frame the trade off from the lower time frame. Always frame it from the H4. So we have this OTE, this OTE, this OTE, and then yesterday this OTE, right? So stick with that for now and continue selling until we take out this low, because that's what the higher time frame is looking for. And then if it switches, then you switch. OTE, 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 right? If you ask me which side of the market should it go, I refer to the futures market. Okay, and by looking at the futures market, we do have the yen reversing from OTE, and we have the British pound also going for a previous month low. So okay. Okay, so I'm gonna take my partial here. Let me take my partial on that. Okay, I'm gonna take my partial on that. And then I'll leave it. Okay, I'll leave it and then see what's gonna happen. Okay, these two, I'm not interested in them for now. I don't like the way they're trading, so I'm not going to touch them for now. But ultimately, I want to see them drop. Alright, if you look on the daily, we raided this high, broke down, pulled back, so I'm expecting them to go down. We have the change in the delivery here on the lower time frame on H4, so anything coming going forward after that should be to the downside. And we also talked about this yesterday, on Friday. We had a run above previous day's high, broke down, pulled back, OTE, and down. When the week started, I was tempted, and thank God I don't trade Mondays. Actually, Mondays I'm going to definitely turn my computer off. I was listening to my spiritual teacher, and he says that the day that you're born, you shouldn't do anything. It should be your Sabbath, right? The day that you were born, it should be your Sabbath. And I was like, okay. So I was born on a Monday, so that's why Monday should be my Sabbath. So Monday, I'll definitely not turn my computer on going forward. I do turn it on, but from Monday, I'll definitely not turn it on. So Monday I was looking at this and I was tempted to sell short. Okay, in here I was tempted to sell short because I was awake at the time, right? And I didn't, because I don't trade on Mondays. So price went up and then broke down, right? So it's good that I didn't trade, because if I did, definitely they would have stopped me out. Okay, so I'm not interested in that, and I'm not interested in this one either. Okay, when I do see what I need to see, I'll be interested, but for now I'm not touching them. Okay. They might probably trade a little bit more. I'm not sure what it wants to do, because it's everything that you're seeing is within this candle's range, right? So all this price action is within that big drop, so it's not really doing anything. You might think it's doing something, but it's actually not doing anything, because we have this high and this low as the significant price point. Anything after that, since they've not taken out this low or taken out that high, all that is going on in here is just inside candle within this. So trading this will be a little bit challenging. That's why I'm not touching it, right? Euro Aussie, I've been short since Friday up here. I've been short since up there. Sorry, not there. That would have been cool, but I shorted here somewhere. Let me check on the 15 minutes. Here. So it's Thursday, my bad. I've been short since Thursday, and I still have a small piece of that position, looking for a run for this low. Right, looking for a run for this low. Now what was the reason why I sold short? If you go back to the weekly time frame, you will see why. So on the weekly time frame, right, notice that we've been dropping down, or if you look from here, this was a pullback, and then we confirmed that we want to continue going down here. So from that moment, everything was pointing to this low, right? Everything was pointing to that low. So last week, that pump to the upside was just a retracement, and I've taught this in the past as a weekly. It's like a weekly retracement on the weekly time frame. So we open and then we go up. That's a retracement. So you anticipate a reversal on a Thursday. Same thing like this one. We open, you go up. You anticipate a reversal on a Thursday, right? And then once you get the reversal, the following week we should just continue going down. So it's not new. So I've been looking for price to continue going down. Yesterday I took a sell on my account and they took me out with spread over here. So I had my stop loss there, and I took the trade in London here on this candle. And the news, I think news came out 14:45, so it went up. So in that movement, when the news came out, I don't know my broker, very wicked, they actually opened their spread. Okay, so they opened their spread, and that's how big the spread was. 17 pips, right? And then they took me out, and then price dropped. So when I saw that, I just thought to you right now, on the H4 we do have what, a swing high. So when I was going to bed, I did place a sell limit, but I didn't get triggered. Now I'm thinking my broker is very wicked. Right, my broker is very wicked, because definitely if I sold, let's say here, and I kept my stop loss there, they would have taken me out, right? It's obvious. But with my sell limit there, they didn't kick me in. You understand what I mean? This is what we are against, right? We are against. It's like it's a mountain. When it's not in your favor, when it's in your favor, they go against you. When it's in against their favor, they don't want to give it to you. But anyway, I think I should have sold this long, rather. If I had put it here, I would have definitely got an entry. So I'm expecting them to go for this low. Okay, so that's our draw on liquidity for today. All right, and this, I think we will have one more run to the upside. I'm going to check oil. I think we might get one more run for this high, so down here would be a nice buying level if it gets there. Now what would change that will be, for now the daily is looking to trade a little bit higher. Okay, so the daily is looking to trade higher. This is just a pullback. Alright, so for it to go back down, because this is just a pullback, on the daily this is a pullback, but on the H4 this is also a pullback. So for it to go back down again, we need the H4 to come all the way down here. So that's why you saw me using this to that. I'm sorry, that one. I'm using that range. So if we do get to OTE, that's a buy, because we don't want to see price trade we don't want to see price trade through this, okay? Because if it does, we're going to expect price to go down, right? So we frame our trade off from that range, okay? So yeah, below that though, we want to buy to attack this equal high. And pretty much that's it. Let's go and look at the indices. For indices, we've been looking for price to continue going lower, especially the Nasdaq, because Nasdaq took out the short-term low. So I'm expecting that to continue. There is a seasonal low that usually forms. There's a seasonal low that usually forms around the 1st September, right? And we've got like a week, so we have a range from this to that. So between this and that, I'm looking for OTE here, to be specific, below this low. So the next downside objective is going to be 50% for the indices. So on this particular one, you're looking for 50% as the next downside objective. Now we could see a trade up here, run previous day's high, and then continue going down. Okay, so refer back to what I said on the H4. As price is going down, use the H4 swing highs to frame your trade ideas. Okay, so if we form a swing high on the H4 and then we drop, then you frame your trade idea. Don't chase it randomly. Okay, have a bit of structure to your trading. So I don't like this because it's not a proper swing high. So if it comes up and then it drops, that gives you a proper swing high, and then look for continuation. All right, and you can use the same thing for this one, even though I don't like that because we've not taken out any swing low yet. It's all up candles. That's good because they've closed in the gaps or the void. They've closed in that. Right, so that's good. On the weekly, they've also closed in this one. We've not closed yet, but looking at it now on the daily, we're beyond that. Okay, so I'll look for it to continue going down. We went above this weekly high and we are back below it. Now, you know, I've given so many tools to help you with this. If we do that on the weekly time frame, you can measure this and then expect price to trade 50%. So it's roughly somewhere here, and that will give you here, that will give you just OTE. Right, so we expect them to trade down here. How would that be? Follow the daily. Follow the daily and then use the H4 as your framework, or your where you're gonna take your use the H4 as your framework. Follow the daily time frame, let the daily keep dropping. Right, the moment you see the daily give, say, a candle like this, you stop and then you wait for the daily to sink back down again, and then you continue. Right, for now the daily is still bearish, so you keep going down, and I'll use it for these two. US 30, not so much. We've not gone below this low, and on the weekly we barely went below that one. Okay, we barely went below that one, so I'm not really keen on this now, because we are going to anticipate a seasonal low to form. When it does, this will be the one to go in because it's showing strength. Okay, this one is showing strength. So if we do get the seasonal low to form, then you might want to consider this pair, because that will be the pair that might move higher because of the relative strength. Alright, so keep that on your chart, make sure you're aware, and yeah, we'll see what we'll get. I think the seasonal low will form roughly the first week of September, right? So we will see what we will get from that. Right, any question or any pair anyone is trading and you want my opinion. If you're trading any pair and you want my opinion, let me know. Before I jump into market structure. Anyone trading any pair that wants me to have a look before I All right, I think everybody is good, so let's go into market structure. Give me a second, guys. I am trying to find my my white pad. Okay, my bad. I was getting my okay, you're ready. Okay, let's switch the screen. Okay, can you guys see the white screen? Give me a thumbs up if you can see the white screen. Give me a thumbs up if you can see the white screen. Yeah, let's go. Okay, so market structure. I think you all have seen it all, but just to make things simple, so that you can understand. When we say market structure, right, it's going to be kind of a hard topic to treat because it's a mixture of the retail slash institutional mindset, because most of us came from the retail to now learn about smart money, right? So in retail, we look at higher highs and higher lows, higher highs and higher lows, and if it keeps making high highs, we want to continue buying, and then if it keeps making lower lows, we want to continue selling, right? But even in the retail world, there are some rules to that, and I'm gonna cover this now. Maybe you might be familiar with it. I'm just covering it because most of the people in the Discord were asking about that because it's foundation, right? So every time frame has got a trend that has to be understood. Now a combination of what the retail sees versus what the institutional side sees is what will make you very dynamic. Okay, so what do I mean by that? You have to blend the understanding of the retail market structure, higher highs, higher lows, and then with the institutional market structure, which is price respecting order blocks. If you blend those and you do what we call tape reading, with those two blending together, is going to give you like a huge insight into what the market is supposed to do. So because on the retail world, yes, we are looking for lows, highs, lows, highs, lows, highs, but it's too vague. Okay, it's too vague. Sometimes it will give you a perfect one, which obviously it will be very discernible, like the one that I showed you on the I think it was the euro yen, right? Euro yen was making high, low, high, low, high, low, and it's very easy to sell when it pulls back, right? But there will be times that price will not do this, right? Or even on the H4, it might do something like this, right? It will confuse the heck out of you. Oops, my bad. That's not what it does. Right? It might confuse, your mind. So in the retail world, this is how easy you can help yourself with the market structure. When price makes a new low, okay, you want to make sure that that new low, the high of that low actually closes below the last low. So if we are looking at this as the beginning of the new trend, right, we want to identify that price actually closed below this low here to confirm that this is a structure high, right? And then as price retraces, we can frame a trade off from this structure high. So we want to place our stop loss above this high because we believe that this is an important high that price doesn't need to go and violate. Okay, and then we expect price to now go and make a new low. As it makes the new low, you want to pay attention to this high because this high is the one responsible closing below this low. The keyword is closing. Alright, that's the keyword, closing. So whatever time frame, now you can apply time frame, whatever time frame that you want. I'm not going to choose a time frame for you. So here, this would be another structure high, right? And then we expect price to continue going down. Now maybe price will retrace again, and then this time instead of it going all the way down, it comes down here and then comes back up. Now when that happens, because this high did not make a new low, right, it did not close below this low, we don't consider this one as a structure high. This will be what some people call inducement or engineering of liquidity. So here, that will be considered as liquidity that can be grabbed and then price will continue going down. But if you have your chart set up like this, it will be obvious to you that this, that, and that is your main structure. So as price is coming back up, you're not looking at this as I'm buying here to go and attack this high. Okay, you're not going to look at price like that. You have to look at price with the mindset that this is the structure high, this is what inducement, or this is engineering of liquidity. Therefore price coming back up again is just going to take out this, and then sometimes you might see either a gap or an auto block here, and then price will just drop and make a new low. Now once price does something like this, we've now closed below this structure low, so you can call this one structure low. Once we get that, now this becomes an important high here. Okay, this one became an important high. Why is it an important high? Because this high took out a previous high. Yes, it did not take out this high, but this is also a high. It's a high inside the lower time frame. So this one will be I'm going to place a time frame on this now, right? Let's say this is the H4 because I love H4 trend like this. This high would be a H1 high. Okay, this one is going to be H1 high, and most of the time it might be even a daily high. Okay, because if we are using this as the H4, yes, this is a H4 high, but it's not relevant because it did not do anything. Therefore, this high here will be just liquidity. So if they grab that and they drop down, you do have a nice important high here that if price retraces, this is where you can, sell confidently down again. Okay, you can sell confidently down again, and then you just continue until price gets to a higher time frame level, and that level by now you should be familiar with it. It can be anything, right? Because it can be OB, it can be gap, it can be an old low, right? It can be anything, right? Until we get there, and then as price gets there, that's when you can start doing what? You can start anticipating this high as, oops, not that one. You can start anticipating this high as what? Where price is gonna break structure. Now, because I'm just drawing. This is just a rough drawing. For price to come all the way up here before break structure is going to be very difficult to get an entry. So maybe it might make one more run and then we get something like this. Then we begin a new trend. Now as we begin the new trend, you're gonna apply the same thing down here. This is going to be an important low because we took out an important high. Price comes down, you want to buy it. Okay, it goes up, it makes a high, it becomes an important low, and then price drops down, and then it goes back up again. Now another thing that you need to be aware of is how price is closing, or how price is going above this high or these lows. Okay, when I say close, I mean close. Okay, the candle, whatever time frame that you're using, that particular time frame's candle has to close above the high. So if we are using this H4 has to close above this high. Bear with me a second. I'm seeing some big changes in price. Okay, let me take you to the other screen so you can see what I'm looking at. There are some big movement happening, so I went to check. So dollar index is kind of rejecting. Gold is making its way back up here. Aussie is also making its way up. I like that. We have formed a swing low, so that's looking promising. British pound is playing up. Those two are playing up as usual. Euro yen went through the gap and it's we've gone through the first one that I measured, which is the 2.7 level. So it's not gone through it yet, but it looks like it might. If it does come here, I want to see it trade through it, right? I want to see it straight through that. That's what I'm expecting, but these are levels that you need to pay attention to. So if you are selling short, that's a good level to do what? To scale up, right? GJ, same thing. I want to see them trade below this low and also trade through that as well. Okay, I keep an eye on the percentage change. So anything that happens, I'll bring your attention to it. Let's go back. Okay, so as I was saying, if you are using the H4, right, then it needs to close. Now, sometimes you will see that as it goes above this high, it will reject, and this will become just a wick. My bad. It will become just a wick, and then it will come back down. When you see that, right, don't use this low as your structure low. Okay, don't use this low as your structure low, because if you do, chances are, remember, I think I've done it in here before. I've taught you that if price is going up like this and then you see something like that, right, price is gonna come back and attack this low, right? So when this happens, okay, in the lower time frame, there is a trend. Okay, in the lower time frame, there is a trend. So that lower time frame trend, it's now in a sell model, or it's in a downtrend, because as it went above this high and then rejected, if you check the lower time frame, you will see something like this. So that would now lead price to come down and attack some form of a low, which will be this low here. So if price comes down, right, we will expect that low to be taken, but because it's going up, we don't expect this to be violated. This one, yes, it can, because it failed to close above this high, but we don't expect this one to break. So on this low, we want to anticipate a raid, or we want to anticipate a rejection. Now, depending on where this happened, because this can happen at a weekly OB level or a weekly high, right? If it happens at a weekly high, then we don't expect this scenario, but we expect this scenario if we are moving from discount. Say price has traded to a weekly gap, and then price started going up from here, right? If that happens down here, we want to use this as a run on the low, and then we expect rejection to continue going up. Okay, but if we are trading in premium up here, and then we see something like this, and it comes back down, and we also had a low here that made a new high, this is an important low, and this becomes just a wick. Now we don't see this as we are coming down here to buy to go back up again. We don't see that. We see this as a break. This will be offering a retracement, and then we expect price to now go down. So you need to be aware where that is happening. Okay, you need to be aware where that is happening, so that you know what is what. Because if this is happening down here, we want to anticipate this as a raid, and we want to buy to continue going up, right? But if I've got too many things on here, if it's happening up in here, we want to anticipate this to now go down. Okay, so know the difference. So in simple terms, when market is going up, make sure that the low making a new high, the high price needs to close above this high. Price needs to close above this high. If we don't, you can, depending on where we are, if this one doesn't and it comes back down, right, we can anticipate that as a reversal on the lower time frame. So we can look for price to go and run this low, and then look for price to go back up again. And I'm going to show you an example after that. Okay, and then we want to see price go up, and the same thing to the downside. As it's dropping, right, we want to make sure that price is also making a close below the lows. If we see price reject and come back up, if we are bearish, then we will just anticipate this and then go down again. But if we are in discount, right, if price traded to a discount level, then we don't want to see that. We want to see this, and then we want to buy here to go up. Okay, that's the only difference. So just have that in your mind, or practice with that, and then see what you get. Now this is the retail side of looking at market structure. Very simple: high highs, high lows, and making sure that price close above a high or close below a low in the trend for you to continue selling the pullbacks or buying the pullbacks. If it fails to close above and we are not in if it fails to close above and we are not in premium, anticipate a stop rate and then look for a buy. Especially sometimes sometimes that will come in the form of an order block. Price will take out this high, but it will not close, and then it will come back down. Sometimes you will see an order block here, right, and price will run that order block and then continue going up, right? So if you did buy an order block and price did run you out, go and check the structure. You will see something like this. And then the same thing to the downside, right? If you are expecting price to go down, this will fail to close below this low, it will come back up. This will be an OB, last up candle prior to this move down, but this will be, this would just be a wick. Okay, my bad, supposed to be a wick. Right, something like this. Okay, and then it will reject and come back up, and you'll be expecting this OB to hold and go down, and it will do something like this, take out this high and then aggressively drop down, right? So that's what it is. So pay attention to that. So that will be the, like I said, retail side of market structure. Okay, it's very powerful if you apply this simple technique. If you don't want to worry yourself about looking at institutional side, because sometimes the institutional side of looking at it can be a bit complicated. So this one might offer you
biscuit. Where's some biscuit? Where's some biscuit? Where's some biscuit? Thank you, Daddy.
You're welcome. Yeah, give it to mommy.
Thank you, Daddy.
You're welcome. Right, I apologize. That's my son. He's used to coming in here for his biscuit. Okay, so that's the retail side of market structure, right? I will talk about the smart money side of market structure on Friday, because I don't want to make this video long, and I'll probably just record both of them in a separate video for you so that you can watch it. But I decided to do this because someone did request for it, right? So here you are, and I'll try my best to record it separately and then put it on there so you can watch just that portion, because I don't want to make these videos too long. Okay, so that's it for market structure for retail. Very simple. We will talk about the other side on Friday. So let's go back to the charts and then end this session. let's go here and here. Okay, so any questions so far? Anyone got any question? If you haven't got any question, that's it from me for today. I'll touch base with you on Friday for our last, no, actually it'll be Wednesday. Next week, Wednesday, will be our last session that I'll have on YouTube. And going forward, everything will be in the Discord. Like I said, I'll only do a YouTube if I feel like doing it, right? Or maybe a day that I'm not doing anything and I feel like doing something on YouTube, then I will do that. But everything will be in the Discord, and then yeah, that's how it's going to be. All right, so have yourself a wonderful day, and I'll see you on Friday for another session. Take care, have a good day, and I'll see you guys soon.